Equalization levy. It's again one of the important topics. So let's start revising. NR, PE in India, no PE in India. PE is for permanent establishment. Okay, if NR is having PE in India, then it is taxable at normal tax rate. If no PE in India, then we have seen that the royalty FTS is charged for the 10%, and other income is not taxable. But there are again some of the companies such as Facebook, Twitter, Google, who provide the services for the advertisement in India without having any PE, and this was the major loss for the government. So this provision has been brought, that is equalization levy. When any resident assessee carrying business and profession makes payment to Facebook, Twitter, Google for advertisement and claims expenditure under section 37, then charge of equalization levy, then we charge equalization levy at the rate 6%. NR having PN, or when NR having P in India gets such services from Facebook, Twitter or Google, then they are also liable to deduct equalization levy at the rate 6%. Equalization levy is not applicable if the aggregate amount from R or NR having P in India of such expenditure is up to 1 lakh, or NR having P in India and services connected with such P in India, such P, or if the payment is not for the purpose of carrying business or profession in India, or services are free of cost. It is applicable on facilities of online advertisement services and provisions of digital advertisement space. Under Section 166 of a Finance Act 2016, collection and recovery of equalization levy. Equalization levy is charged at a 6% if payment or payable is more than 1 lakh. Equalization levy deducted shall be deposited to CG up to 7th of the next month. If it fails to deduct, still liable to pay the levy to central government. Interest at the rate 1% of part of the month on late deposit. Penalty for this is 1000 per day during failure continues to the extent of levy. If somebody fails to deduct such amount of levy, then if it fails to deduct, then the assessee is still liable to pay. But again, if it's not allowed as and it is not allowed as deduction in current previous year, I mean the provisions are same like TDS. Whenever it is deducted and paid to the government, then and then only we are able to claim the expenditure under section 37. And if we fail to deduct, the levy is the penalty is 100% of levy. Return is also mandatory. We have to file the return under form number 1 before the 30th June of the following financial year. Belated or revised return can be filed in 2 years from the end of the financial year in which the services were provided. AO serves the notice and then the assessee has to file. If AO serves the notice and then assessee has to file the ROI or statement within 30 days, and if assessee fails to do so, then the penalty is ₹100 per day of the default continues. And one more thing, if the Facebook, Twitter, Google are not having any other income and there is no any other connection to India, and the services provided by them uh, has been already subject to the equalization levy, that is, the levy is already been deducted on the services provided by them, then there is no requirement to pay or to file the return of income in the previous year. Statement under section 167 processed under section 168. Intimation sent within 1 year from the end of the financial year in which the return was filed. Intimation amended within the 1 year from the end of the financial year in which the intimation sought to be amended was issued. That's it. So equalization levy is done. Thank you, friends.